of individual stocks are in focus. And what will keep the bulls happy is that the advance decline ratio is still firmly in favor of advances for the second day running. One of them on our radar right now is Aadhar Housing Finance, has made its debut on the exchanges today. The stock listed largely flat at about 315 rupees per share. Rishi Anand, who's the managing director and CEO of the company, joins us now to discuss the company's post-listing plans. Thanks a lot, Rishi, for joining in. What we've been speaking about in terms of growth or demand in consumption over the last couple of years has been very skewed towards the upper end. You cater to the lower end of the society with average ticket sizes being around that 10 to 11 lakh rupee mark. How is consumption there right now? Have you seen a pickup in the last, couple of months or so? And would that mean you grow above and beyond that 15% CAGR that you've been doing over the last few years?
Great. First of all, very good morning to both of you. Too many questions in one question, but I'll try and attempt the questions. One is you spoke about the demand on the lower income segment that we operate in. We typically operate in the EWS LIG segment. And if I were to refer, when you call out the growth in the higher segment is higher, it is simply because of the ticket size. If you look at one of the datas of RBI in 2019, which spoke about the housing unit shortfall in the country pegged at about 10 crore housing unit shortfall, out of the 10 crore, 9.5 crore housing shortfall comes in the EWS LIG segment where we operate. And if I were to translate that into the housing loan loan amount, it translates to about 35 trillion. So demand side, I don't see an issue. Yes, we have been growing at the range of about close to about 20% on AUM, 23-24% on disbursement. ROEs are great, ROA is great. And the way the market demand is pegged at, I don't see an issue at all when it comes to growth.
Mr. Anand, good morning. Thanks a lot for joining in. Congratulations on becoming a public company today. That I wanted to ask you about the fact that you're focusing more on the non-home loans business as well, right? The share from that has increased to almost 24% from 15% for the first 9 months of FY24. Do you see that share going higher going forward into FY25 as well, or do you expect to maintain that at current levels?
So if I were to compare 9 months FY22, FY23, we were at 23% FY22, we are at 24% FY23. I don't see any reason why we should take it beyond 25%. Internally the management feels that we are a housing finance company. 75-25% is the kind of number we should be maintaining. Above all, there is a housing finance companies are regulated with a set of 60% being home loan retail, which translate to about 75%, home loan retail on balance sheet, which translate to about 75% home loan. So I think we are very comfortable maintaining 75-25 on home loan, non-home loan.
All right, that makes sense with a 20% AUM growth, 75-25 mix. What's also interesting is that the shift that you've seen from salaried to non-salaried. In fact, self-employed as a percentage of your customers have increased from about 36% a couple of years ago, now all the way up to 43%. Just wanted to understand the economics of the same. Do they offer higher yields, and is there a little more risk to self-employed versus salaried?
So what has happened with us is, we've predominantly been operating, the way we've expanded our geography, we were always in larger cities and larger towns. In the last 1.5 years, we've started moving into deeper locations, smaller talukas, smaller districts. The moment you start hitting these smaller locations, they are predominantly self-employed customers. That is one point why our, self-employed segment has seen a little jump. Salaried segment, we've now hovering around 57-58%. Self-employed definitely gives us a kicker on yield of about 350 basis points higher than what home loan, higher than what salaried customer gives in. And on the risk side, it gives me only a high of about 40 to 50 bips on delinquencies. So yes, from a pure business perspective, it makes sense to balance out both salaried and self-employed. But I think the enhancement of self-employed is happening because of the deeper impact, the deeper locations that we are getting into.
Right. Mr. Anand, I wanted to stick to the non-home loans business because that has also contributed to your net interest margins as well. As of the December quarter, they stood at around 9%. Now that you're a public company, I can ask you some numbers. What's your guidance for your NIMs going into FY25 for the full year?
See, we've been a comfortable company, comfortable at about 8.5-9% kind of NIMs, and spreads become one of the important factors in the contribution to NIM. We're hovering around 5.5 to 6% on NIMs and on spreads, and we are very comfortable maintaining that. Yes, self-employed and loan against property contribute significantly higher to your NIMs, and as I guided, 25% will be our non-home loans. We would not want to extend beyond that, so that's the proportion we will be comfortable maintaining.
All right, and final question then, with this capacity, with the fundraising that you've done, your CRAR increases. How long does this fund your growth for before you have to tap the markets once again?
So the way we look at it, anywhere between 3 to 4 years, I don't think we need to come back to the market. We've come to the market now. 3 to 4 years from now, there is no requirement for coming back to the market.
Well, promoter shareholding is around 76.5%. Mr. Anand, would you look to bring that down to 75% anytime soon?
It's actually moved down to about 70, close to about 75.8. With a 22-23%, 22-point-some% shareholding dilution now from a 98.7. So I don't think we are going to be hitting the market very soon.
All right, Mr. Anand, we leave it at that. Thanks a lot for joining in. Wish you good luck as a public company for FY25. We're looking to chat more often on this platform. That was the management there of Aadhar Housing Finance, a subdued listing, just 0.5% higher roundabout at the issue price of 315.